Good morning, good afternoon, and thanks very much, Simon. And big thanks to Omar and Chris and the whole team at GEFI for the invitation. And I think, as Simon referred to, I think for the opportunity to speak about the principles of responsible banking and the progress we've made in the past year since their launch. I'm going to give an overview of the principles themselves and a little bit about more recent progress. And then I think even more interesting is we're going to have Rafe Haneef from CIMB Bank in Malaysia, who's going to talk in detail about what they've been doing in terms of implementation and their wider approach to sustainability action. I think that really starts to get into the details and I think exciting changes that are underway within banks, within the banking industry today. We hope, as Simon has mentioned, we hope the principles for responsible banking can herald a new age, setting out a clear framework for what it is to be a responsible bank. Now, the underpinnings for this work, I think, stretch back to the 1990s when banking for the first time started to understand, started to get pressure for managing environmental and later social risks at the transactional level. And certainly a lot of progress was made early on. I think the banks were the first within the financial industry to take these issues seriously. However, starting around the same period, deregulation started across the industry and certainly drove some banking practice that was certainly questionable and was a big contributor to the global financial crisis in 2007, 8, 9. Even just over 10 years after the global financial crisis, banking has still been in some sort of state of uncertainty. There were certainly regulatory fixes, certainly the Basel III reform, which helped shore up balance sheets, which certainly have been very important today in the ability to respond to the COVID crisis. Banks are in much better shape today, more stable. However, there was also some costs, including the decreasing ability to provide long-term finance, particularly to infrastructure and other areas that we need as part of the climate and other sustainability action menus. And banking continues to be one of the least trusted industries, and many question their license to operate. Although banks, many would be considered too big to fail. They're criticized for being slow to innovate. They increasingly are challenged, including by a new generation of financial technology firms, fintechs, who are ready to really try to challenge their primacy in the financial system. So, I mean, as I mentioned, banks have certainly made progress in managing environmental and social risks at the transactional level, but their bigger role in society and the economy, I think, remains in some sort of state of flux. And, meanwhile, today, we have this wider development within the corporate universe where leaders have begun questioning the notion of shareholder primacy as defined by Milton Friedman in the 1970s, with some significant updates. And last year, the Business Roundtable in the United States promoting a form of conscious or stakeholder capitalism, whereby a company has a broader responsibility to society. Now, this clearly is a strategic notion. And ever since the launch of the Principles of Responsible Investment, which we were happy to undertake with the Global Compact in 2005 and 6, ever since they were launched, and you're going to hear about them, current status, I believe, on Wednesday of this week. But since the investors stepped forward, there's been the question of why not banking? And the typical response was, well, we have a lot of frameworks, we do a lot of reporting, and frankly, we're too heterogeneous in terms of lines of business to have one set of principles. We have the Equator principles for project finance, we have the green bond principles for bond issuance, etc. Why do we need something that override or an umbrella approach to sustainability across all of what we do? I think that notion, as I can say, maybe was blown to the wind. And I would say one of the main inflection points was in 2015, when the Sustainable Development Goals and the Paris Agreement were signed, as Simon mentioned. And henceforth, the pressure on banking, which had previously really just come from civil society organizations, it started to mount. And then investors, regulators, customers, employees, all of these stakeholder groups were increasingly pushing banks to say, we take these issues seriously. We believe this is strategic and needs to be addressed in the organization, from the boardroom on down. So these are the considerations that help motivate leaders in the banking industry to come together starting in 2018 to draft, under the auspices of the UN, a set of global principles for responsible banking. Now, this framework aims to set a global benchmark for what it means to be a responsible bank and provide a single framework that guides banks in clearly defining their purpose, their strategy to create value for society and shareholders, while enabling them to remain competitive. Essentially, it's to seize the opportunities of and thrive in a changing economy and society. So the Principles for Responsible Banking, or as we say, the PRB for short, as drafted and later adjusted and finalized, they include a preamble and 6 specific principles on the topics of alignment, impact and target setting, clients and customers, stakeholders, governance and culture, and transparency and accountability. Several aspects of the PRB framework are unique, from focusing on aligning all lines of business to contribute to individual needs and societal goals, to the forward-looking orientation around impact assessment and target setting, and finally to having a firm accountability framework with assurance of signatory reporting. So I will briefly review some of the key elements of these principles. Principle 1, which is probably the most important, sets out the objective and vision of the principles, essentially aligning a bank's strategy with society's goals as defined by the UN Sustainable Development Goals and the Paris Climate Agreement. Principle 2 requires banks to identify their most significant impacts, both positive and negative, and to set a minimum of 2 targets that address at least 2 of the identified impact areas. These chosen targets need to be in the areas where the bank has the most significant impact, so banks are required to focus where it matters most. A bank's most significant impacts on society, the economy, and the environment are indirect. Therefore, banks can achieve some of their really big, most significant contributions to society's goals, not through their individual actions, monitoring their paper use, their energy use, but really by working with their customers and clients, which is the thrust of Principle 3. Banks on their own can only make so much progress in achieving society's goals, so stakeholders have important roles to play, and this is a subject of Principle 4. And in line with the PRB framework documents, banks are required to develop governance structures that enable and support effective implementation of the principles, which is the focus of Principle 5. This includes having appropriate structures, policies, and processes in place to manage significant impacts and risks and to achieve these set targets. And as specified in Principle 6, banks are required to provide information on their implementation of principles in their existing public reporting within the first 18 months of becoming a signatory and every year thereafter. This reporting should include information about their positive and negative impacts, their risks, and their targets. And to ensure credibility of this reporting, banks are required to provide assurance or third-party assessment of this information. I think this is a first for such a sustainability framework. Now, based on the signatory banks' aggregated individual reporting, UNEP will take stock of collective signatory progress and publish an assessment every 2 years. This periodic review of collective progress will support continuous improvement, enable banks to share lessons learned, and establish the credibility of the principles of the signatory banks, and I think of the sector as a whole. So that's the framework that was launched last year in New York by UN Secretary General Antonio Guterres and 130 banks, including 43 of their CEOs who attended in person at the UN. Since then, as Simon mentioned, it's increased close to 200 banks, servicing 1.6 billion customers globally and managing about 40% of global banking assets. Of course, those are just the signatory numbers. I think the important question is what exactly has been achieved in this first year. And just to briefly summarize that, over the last 12 months, signatories have put in place structures and processes to first ensure the effective implementation of the PRB, and two, to ensure robust accountability and transparency. And this includes, they've established a new governance body, the PRB board, who will oversee implementation. They've established an individual and collective progress review process. They're in the process of establishing a civil society advisory body and also a delisting mechanism for banks not delivering on their commitments. Of course, the real progress is really what's happening in the banks, not between them, and what they're doing internally in terms of creating the strategy, policies, the training, the accountability mechanisms needed to embed the principles across their companies, starting to work with their clients and customers, and we're going to hear about that from Rafe shortly from CIMB, to provide sustainability focused advice and new financial products such as sustainability linked loans. And then to overall begin to scale up efforts to drive the green transition, to review their emissions portfolio. Some of them are starting already to set Paris-aligned portfolio targets, and of course, developing green financial products, green services, green loans, etc. And overall, making big efforts to step up for society in response to the pandemic, which certainly in the near term is the biggest issue globally that banks are dealing with, to maintain business liquidity, to deferring payments. They've been establishing massive credit lines, working with governments, down to providing medical equipment to supporting communities and more. So in finishing up, I should just highlight what's happening in the year ahead. We will, as I mentioned, be launching the Civil Society Advisory Body to advise the Banking Board and the community of signatories. The call for applications will actually start this week. All eligible institutions are really invited to apply, and please have a look at our website to learn more. This year, we will also prepare the first biennial collective progress report on implementation of the principles, which will demonstrate how signatories are starting to deliver on these commitments. To maintain the relevance of the framework, we will undertake the first biennial review of the principles themselves and their framework documents, to which some adjustments might be made. And this was done on every 2-year basis, I think, showing that the set of principles drafted on day one, they may no longer be relevant in their early form 2, 4, 6, 8 years later, and therefore they need to be live, and the industry needs to be strengthening them over time. In terms of working with the members to learn from each other and develop the procedures to deliver, we have a whole series of working groups that members are part of to work together on issues like impact analysis, target setting, reporting and assurance, engaging with clients, and progress monitoring and more. So it's still very early days for the PRB. A good number of banks, a good share of the global banking industry have signed up, but this signing is only the first step. These banks really need to establish the systems and capacities to deliver, some of which I've mentioned, and many we know are going to be watching their actions considerably. Really only once credible targets are set and clear progress is made towards meeting them will the PRB become a framework fit for defining the notion of a responsible bank, one that's oriented towards financing the greatest needs of society. So now, I look forward to hearing from Rafe Haneef from CIMB in Malaysia, but what they actually have been doing to implement the PRB and how this aligns with the Islamic banking approaches that they have been applying for quite some time. Rafe, over to you.
Thank you, Eric, for the kind introduction. I would also like to thank the organizers, Global Ethical Finance Initiative, for this timely and important event, the Ethical Finance 2020. I am in charge of Group Sustainability for CIMB Group, headquartered in Malaysia, and I would like to take this opportunity to share here the exciting journey CIMB Group have embraced since the year 2017. Since 2003, the CIMB Group, through its subsidiary, CIMB Islamic, has been promoting Islamic banking across Malaysia, Indonesia, Singapore, and Brunei. The Islamic banking industry is a values-based industry where the financing and investment is designed to promote positive impact in both the society and the community, and also to eliminate negative impact in financing and investment. And CIMB Islamic, as part of CIMB Group, has been promoting these socially oriented financing initiatives across the region. And this has brought tremendous benefit to the group. And the CIMB Islamic financing is based on certain policies and procedures that have been put in place to guide and monitor the financing and investment in accordance with Islamic laws and principles. According to Islamic principles, the financing and investment driven through the Islamic finance sector has to be designed to ensure that the net benefit is positive to the community. So sectors that are socially harmful, like tobacco, alcohol, gambling, pornography, arms, and others, have been prohibited from the ambit of Islamic banking and finance. And Islamic finance then proactively go and invest in sectors which are socially beneficial, like manufacturing, plantations, and other positive impact social and economic activities. And in line with Islamic finance principles, we have found that the ESG movement has been also focusing on social impact, which is in line with the United Nations United Nations environmental principles for financial institutions. So when the group looked at overall the Islamic finance benefits and the benefits that can accrue to the entire group, CIMB decided to embrace ESG as a core principle and incorporated this principle in the 5-year strategy called the Forward 23 strategy. This strategy was put in place in 2018, and one of the 5 core principles under this strategy is to focus on sustainability. Now, as I mentioned earlier, while the part of sustainability has been driven through the CIMB Islamic business, the group decided to broaden this across all businesses within the CIMB group, and to ensure that we adopt the best practices and be part of this global movement to redefine how financing is being carried out across the globe. CIMB Group decided to join the United Nations Environmental Programme for Financial Institutions back in July 2018. And since then, we have been one of the founding members. There are 27 founding banks, founding members in UNEP, and CIMB has been playing a key role since we joined in July 2018. And we have been engaging with our various stakeholders within CIMB and externally. So in 2018, we had stakeholders engagement with our shareholders, with our board members, with our regulators, with our customers, with our employees. We also had engagement with selected environmental and social groups, and also with civil societies and communities to get their feedback, as we know that in the years to come, we need to shift our focus from developing or focusing on only shareholders' value towards a broader stakeholders' value-oriented firm. So in line with an engagement, we had received positive feedback from all the stakeholders that we engaged in, and we decided that we need to further develop the sustainability principles, also in line with our commitment under the UNEP. And therefore, the group had come up with a 5-year plan under the Forward 23 strategy, which will be focusing beyond the shareholders' value and effectively focus on the triple bottom line with positive impact to people and planet. So since July 2018, we have been developing our internal policies and procedures. We have now put in place a group sustainability policy. The group sustainability policy focuses on the direct impact that results from our operations across the region. This could be directly arising from our usage of paper, energy, water, and also our carbon emission coming directly from our businesses, plus indirectly through our staff and customers. And we also look at ways to recycle our plastic usage and other environmentally harmful products and services. And we also have put in place a vendor code of conduct to ensure that the supply chain that we are involved in is also sustainable and in line with the principles that we have signed up for. And under the group sustainability policy, we also have come up with another policy called Group Sustainable Financing Policy. Now, whilst the group sustainability policy is focusing on the direct impact arising from our businesses, the group sustainable financing policy focuses on the indirect impact arising from the various financing and investment that we generate from our various businesses. So arising from the group sustainability policy is a very important practical aspect, which we call the enhanced due diligence on customers that we determine as having a negative impact. So we have chosen as the first phase certain sectors that we believe, and which is in line with global standards, that have net negative impact to the environment and social implications. So we have, for example, shortlisted certain sectors like primary agriculture, mining, forestry, and coal, for example, as industries or sectors that overall results in negative impact to the planet and people. And we then have put in policies, sector guidelines that could define the way we will operate in these sectors. So for example, for primary agriculture, one of the industries which we are focused on in countries like Malaysia and Indonesia is palm oil. So palm oil plantation, we have put it in our policy that we will only support companies or industries that are in line with the standards that have been developed in the respective countries. So for example, we have MSPO, Malaysian Standard Palm Oil, standards which are being developed or which have been already developed in Malaysia. And the same in Indonesia, we have the ISPO. So if a company is in compliance with the MSPO or the ISPO, then we will support those companies. The same will go for those other sectors that we have identified. We will be obviously going through this process over a period of time. We have given ourselves a 5-year time period to first develop these policies and create the capacity within our banking as well as our external stakeholders. So we have to build capacity to create awareness among our customers. What are the implications if they still continue with these negative impact sectors, and how we can help them to transform their business practices to ensure that overall their business is creating positive impact, and work with them over a period of 3 to 5 years to ensure that they become compliant. For example, if they are a palm oil player, then they will have to comply with this MSPO over a period of 3 years. And if they don't comply, then we have to make a decision whether we will continue guiding and helping them, or we will think that these are companies that will not be able to comply and we will have to make a decision to exit them. So the instruction is very clear. We have to do enhanced due diligence on these customers, which come from these high-risk sectors. And we will then make a decision whether we will help them to build capacity and onboard them to become positive impact companies, and decide to exit if they don't. So the same will go for other areas like indirect impact, where we will focus on companies that have positive impact, like renewable energies and other what we call sustainability linked companies. So we have come up with various products that positively develop or proactively develop our positive impact sectors. For example, we have allocated about 3 billion ringgit for sustainability linked loans, which we called loans or financing that are creating positive impact. And we have then given incentive to those companies to get profit rate or interest rate rebates if they comply with what we call the sustainable performance targets, SPTs. So recently we have done a transaction for 270 million ringgit This is a financing that was given to an international company. And this company has certain targets called sustainability performance targets. And if they meet these targets over a period of 4 years, that's the tenor of the loan. And if they comply with this, then on a periodic basis, they will get a rebate on the interest rate or profit rate that has been determined upfront. So this is a good incentive for companies who want to become sustainable, and the bank is here to help them to achieve their sustainability targets. And in the process, they get a reward, they get a positive reward. We also have come up with various consumer banking products to also nudge the consumers to broaden their perspective, to embrace sustainability principles, and embark on a journey that will help them to live a sustainable life. So if they are buying a car, and we nudge them to buy a hybrid car, a more sustainable car, and they will get a financing rate which is much more competitive than a normal financing rate for a conventional car. The same goes for green buildings. If they opt to buy a house which is sustainable, which has been certified as a green home, then they will get a rebate or reduction in their financing rate. We also have come up with saving solutions we call EcoSave. If customers decide to deposit their funds in a deposit product called EcoSave, which is an Islamic product, we have contractually agreed to pay 0.2% of the portfolio profits to certain causes which are green certified. So these are all incentives that we have given to our customers to help them embark on a journey which will lead to overall sustainability to people and planet. Obviously, in this journey, there would be lots of expectations from our stakeholders. We would like to assure them that in line with our policies, in line with our commitment to UNEP FI, and we've also been one of the founding members who helped to draft the UNPRB, United Nations Principles for Responsible Banking. And in line with this UNPRB, we will take our utmost care and effort to ensure that we will comply with the policies and commitments that we have put in place. In the process, there could be some delays, given that we need to build capacity internally and also need to engage with our customers to ensure that they have the capacity to fulfill the sustainable performance targets. And during this process, there would be some issues and conflicts, and we hope that we could work together with the various stakeholders to resolve it. Our commitment is quite firm. CIMB as a group has taken this as part of its core pillars, one of the 5 pillars to define where CIMB group would be in the years to come. And all the businesses are engaged in making sure that we proactively and over time gradually grow the positive impact business and over time reduce the negative impact. We have substantial experience. Since 2003, we have been developing Islamic banking business, which is effectively very similar to the UNPRB principles, where the banks, the signatories, there are 130 signatories to UNPRB, and the signatories have clearly articulated certain principles that they would comply or conform with. And essentially, the principles revolve around promoting positive impact and reducing negative impact within their portfolio, which is what Islamic banking has been doing since 2003. And under the UNPRB, they have to clearly lay out the policies and procedures, which we have in CIMB Group developed since 2018. And Islamic banking has had those similar principles and policies since 2003. And in addition to that, CIMB Islamic has, like all other Islamic banks, have independent Sharia committees who certify those policies and products and procedures that we have put in place. And they also give annual certification that we have complied with the policies that we have put in place, and the products are in compliance, and our products and services are in compliance with the policies that we have put in place. So since we have been embarking on this journey since 2003, today we are trying to embrace this policy across the group. And I believe we will be successful. We just need a bit more time to ensure that we are able to engage with all the stakeholders. This process, this journey cannot be just driven by one entity or a group of entities. It has to get the support of the community, the businesses, the regulators, and the various stakeholders. But I sincerely believe that we are in the right journey. We pray that others will join this effort and make this world a more sustainable world. And the one thing that we can learn from the COVID-19 pandemic is that all our actions have got serious consequences. Given this insatiable thirst for growth, we have indiscriminately destroyed some of the most valuable resources on this earth. And this has led to the depletion of the forests and natural reserves. That has led to closer contact between the wildlife and humans. And that essentially has led to the rise in zoonotic diseases. And COVID-19 is just one of the consequences of our insatiable thirst for growth. And this growth has to be moderated. And COVID-19 has shown us that a lot of those things that we took for granted in the past need to be reevaluated. They need to be redefined, and we need to readjust our lifestyle to ensure that in all actions, whether it's financing, investments, deposit making, consumption, we need to build in that sustainability filter. And we have all the standards that we need. What we need is commitment. And this commitment needs to be sustained, needs to be fully endorsed and supported by the stakeholders so that all the players within the ecosystem can ensure that we can meet the targets in line with the Paris Accord and many other international conventions that we have signed up for. So I would like to thank the organizers again for organizing this event. I think this would create more awareness, build more capacity, and eventually we hope that all our dreams will come true and we will leave a better world for the next generation. Thank you.